Long ago, insurance companies had a policy called boiler and machinery insurance. It was designed to cover boilers, which were prone to explosions. The building, contents, and boiler were all covered if an explosion occurred. Over time, boilers became less common, and other equipment like computers, machinery, and electrical systems started to break down. To address this, the policy evolved into what we now call equipment breakdown coverage. Its main purpose is to cover losses caused by perils that commercial property policies exclude, like mechanical or electrical breakdowns. Equipment breakdown coverage exists because commercial property policies don't cover certain internal events. For instance, if a boiler at D Corporation explodes, damaging the building and contents, commercial property will not cover the damage caused by the peril itself. Equipment breakdown fills this gap, ensuring that internal damages like boiler explosions, mechanical failures, and electrical breakdowns are covered. Think of it this way: commercial property protects the outside in, while equipment breakdown protects inside out. Equipment breakdown policies define three main terms: covered equipment, covered property, and breakdown. Covered equipment includes boilers, mechanical and electrical systems, communication and computer systems, and utility supply equipment. Covered property is any property you own or are legally responsible for. Breakdown is a direct physical loss caused by equipment failure, like a mechanical rupture or electrical arcing. Equipment breakdown coverage focuses on sudden and accidental failure of machinery that is part of a building or production process. It does not cover mobile equipment or contractors' tools. For example, if a factory motor suddenly fails, equipment breakdown covers it. But if a forklift breaks down outside the building, this is not covered under equipment breakdown. Like other policies, equipment breakdown has exclusions. Perils such as war and flood are excluded. Damage from fire or lightning is covered under commercial property, so equipment breakdown doesn't pay. It also excludes damage from wear and tear or maintenance issues. The policy only covers sudden and accidental breakdowns. Equipment breakdown losses are usually paid on a replacement cost basis, meaning the item is replaced with a new one. Replacement cost does not apply if the property is obsolete or not replaced within 24 months. If desired, clients can choose an endorsement to pay on an actual cash value basis, which accounts for depreciation. If one equipment failure causes other equipment to fail, equipment breakdown treats it as a single occurrence. This is the one-loss rule. For example, if a motor fails and causes a generator to fail, the policy applies only one deductible. This prevents multiple claims for a connected series of breakdowns. Equipment breakdown policies are designed to cover accidental breakdowns, not maintenance issues. The suspension provision allows insurers to inspect equipment without notice. If a defect is found, coverage is suspended until fixed. Once corrected, coverage can be reinstated. In summary, equipment breakdown coverage protects internal machinery, equipment, and production systems that are excluded by commercial property. It includes features like replacement cost valuation, one-loss rule, and the suspension provision to ensure proper maintenance. Wear and tear, outside perils, and maintenance issues are excluded. Thank you for watching. Please like and subscribe if you found this helpful, and please stay tuned for our next easy property and casualty exam video to help you pass your exam.